Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest. Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right, it's good to be back with everyone. Hope you're doing well. So it's been a few weeks since we've done a live stream, and if you're on our email list, you should know why by now. So I really want to thank everyone who has shown their support, their understanding. That was also the reason why we've had to, reschedule our conference. And so I wanted to start this live stream by thanking our community. You guys are awesome. You guys have shown support, followed up, sent prayers, sent well wishes. It's amazing. It's really amazing. I've gotten countless emails, with condolences, and I really appreciate it. I'm sure Renee, our CEO, appreciates it as well. And so thank you guys really, really a lot for that. So I'd scheduled this live stream for 2 weeks ago, but then of course I didn't get to do it. And so I thought it was actually interesting because when I first got the idea to do this live stream, there was a certain stock that was doing pretty well on the market. And I thought, maybe good to show persons how to, think about stocks for their portfolio, because it's not something that I believe persons have a clear strategy on. Now, when we do the investment challenge, we help you with those things, right? And I'll get into that in a second. But I've been investing for almost 8 years now, and I've seen some different conversations, right? Some persons are like, they would say things like, they're not too concerned about dividends because they get enough in cap gains. There are persons who focus mainly on dividends. And I mean, the truth is, I think it's the best of both, right? So I'm just going to cut that to the point right here, that you really want to invest and get both. And what I'm going to be doing for the first half of this session is tell you why. Then I'm going to take your questions. We're actually going to be continuing the conversation in our brand new community group. Hopefully you guys have gotten the email to join us over there. We are on a brand new platform. We've made a decision to consolidate our platforms because we've been stretching ourselves too thin, for lack of a better phrase. And so we want to be able to provide the most value to our community. We want to encourage participation. We want to have all of our, resources, links, templates in one place. And it's still going to be a free community. And so you're more than welcome to join us. That's where I'll be, because we have a meetup at 7 p.m. So within the next hour, I'll be over that platform. So if you want to join me for that conversation, you're more than welcome to join. And the link is in our bio on our platforms for you to join the new community. And it's been sent in your emails as well, right? So let me get started here to make the most of the time that we have here. So before we jump into that, I do want to say we still have our Black Friday specials. It is Black Friday that we're streaming this live. You may be watching this on the replay. Our very best that we have to offer as LGI to you is to take advantage of one of these three things. Now, the absolute best value for money would be the investment challenge. That's where you have a monthly subscription. You get to meet with us as a group every month. You get challenges. You get to learn different strategies like investing in the US markets, investing on the JSE. It's our best kind of overall value for those who want to take the next step. Say, okay, Jermaine, I know the basics, but I want more. That's a one-on-one coaching. That's 25% off right now. That is one-on-one personalized. We meet as often as you want for a maximum of 10 sessions, of course. We can meet weekly, we can meet monthly. That's up to you. And we're able to work on something specific that you want to accomplish. And then, of course, we have the one-on-one consultation, which if you just say, well, Jermaine, I'm struggling in this one key area, I just need 1 hour with you to talk it through with you and get your guidance and support. All of these are available right now at a discounted cost. And I can tell you, when I first thought of this, I was like, these prices are a little too low. I'm afraid that persons may not understand the value that we're offering. But I said, we wanted to make it a great incentive, especially since the timing of us moving to a new platform. So I wanted to just kind of make that as irresistible as we can, because when we go into next year, when the 3-month discount on the challenge ends, for example, the price will never be at that low again, especially based on the fact that every month that we have the session, those sessions are recorded and they stay in the archive forever. So if you join the challenge now, you actually see all the videos from earlier this year that you'd have missed. And if you join 2 years from now, you'll see 3 years worth of videos. That's the benefit of the challenge. So I think that's an amazing value. And so, yeah, just wanted to get that out of the way for those who may not know, because you still have time. You have until midnight tonight to take advantage of those deals. And so there you go. All right, so I'm going to be talking about really one thing, but I want to lay the foundation as I always do. Talk about dividends, because I'm assuming that there may be somebody watching this for the very first time. You've never, learned about it. You don't know how to invest. I want to always, think about those persons, because that's who we're meant to help. That's who we're positioned to help. Let me say it that way. So I'm going to lay the foundation, then I'm going to talk about both, right? So I'm going to pause here and ask you, those in the chat, those in the comments, how do you invest now? Do you invest for capital gains primarily, or do you invest for dividends? So just say one or the other, or just say both. So I'll get a feel as to where you are. So let me know in the comments, and I'll be able to call out some of them. All right. So let's lay the foundation. There are only two ways, even if you include shorting, there are only 2 ways to make money from stocks. And I see Roger saying both. That's awesome, Roger, right? I'm both as well. At first, I started out really focused on dividends. So I have, I think, a strength for dividend investing. And then I really started to appreciate the value of investing for capital gains as well, right? Because when I see stocks I'm invested in doing 100%, 200%, 300%, you kind of appreciate the capital gains as well, right? So there are 2 ways to make money. There's I can't think of another way, of course, where we're talking about basics here, right? So let me explain them plainly. Capital gains. So you purchase a stock for $50 and it increases in value from the original purchase price. So whatever your original purchase price is, once it's higher, at some point in the future, you have what we call unrealized gains, right? If you sell those shares, you have what we call capital gains. So you actually gain when you sell. That makes sense, right? But if you don't sell, it's called unrealized, right? That's simple. I think everybody should understand that. On the dividend side, now this is a sum of money paid from the profits or the reserves of a company. Now, on the stock market, you have companies that are known as dividend-paying companies, right? Meaning they don't really function for any other purpose but to give back cash to their shareholders. They're not gonna have any wild or massive growth. They may make some strategic moves every now and again, but there are some stocks that are known as dividend paying stocks, right? Which is awesome, by the way. We have that both in Jamaica and the US, right? So you have like ETFs in the US, you have dividend stocks that pay even an increasing dividend each year. So you have the benefit of leveraging both as an investor. You don't have to choose. Now, one of the issues I find in how we invest, or how we may teach people how to invest locally, is that, well, I'm sure you saw my rant a few weeks ago about, this whole idea of diversification, right? So they usually tell you to diversify. I made my case about that a few weeks ago as to what I think you should do there. So if you missed that, just be sure to watch that video. But most of us, when we start investing, we're kind of not sure which one we want to focus on, right? We usually get introduced through an IPO, or we'll buy some shares in that IPO. We may or may not get some capital gains. We may or may not get some dividends, and we just kind of settle for what we get. When you get to the next level, though, you start to think about, okay, how can I get to a point where I'm predicting how much I'm able to earn from my portfolio, because I've calculated the dividend yield, and I want to make a projection as to how much I'm gonna make from my portfolio each year. Now, I got to that point about year three or year four. I started to say, okay, my goal for my portfolio for the year is to make 20% in capital gains and to get somewhere between 5 to 10% in dividends. When you invest in Jamaica, the dividend yields on average are somewhere between 1 and 5%. So my target is usually 5 to 10. Of course, I stay away from two main companies. I think everybody knows that. So those companies are off the list for me. So I usually look at the next tier in terms of dividend yielding stocks as to which ones I can go for. And so I'm trying to focus at certain number of stocks in my portfolio on dividends, right? I'll talk about that some more another time, right? So let's talk about dividends for a sec. I think that's the easier one to explain. So let's talk about that, right? So dividend is a portion of the company's profits paid out to you, its shareholders, right? Dividends aren't mandatory. They aren't guaranteed. But there are companies who, for example, would pride themselves on paying a dividend. Now, I think the ones who pride themselves on paying a dividend should also care about the yield, but that's another conversation, right? But there are companies who will try to prioritize the paying of dividends because they appreciate and understand that it's really the investors, it's really me and you who determine the price of a share, right? It's based on the demand that we have for those shares that drives up the price, as well as, other things, of course. But a company doesn't have control over the price of its stock, right? They only have control over the IPO price, or if they're doing an APO or rights issue, etc., they have control over that price that they set. But it's the market, it's the investors, it's you and me buying and selling shares that determine how much those shares sell for. If I have shares in company A and I want to sell it, for $100, there's nobody to control how much I sell those shares for. So we determine how much we sell for. And we have to appreciate as well that others can control how much they sell their shares for, right? So when we see a stock moving down in price, we may be holding it for the long term, but somebody somewhere says, hey, I need this money right now, or either I see a different opportunity, or maybe I'm low on cash, whatever the reasons are. But if you own the shares, you determine the price that you sell them at as well, right? So that's something to think about. But dividends are usually something that you look forward to, right? A company can say, we're going to try to pay out, 25% of our profits on dividends, or 50% of our profits on dividends. They may have what we call a dividend policy to determine, or at least communicate to you what they plan to pay, right? So dividends, and the beauty of it, I'm hoping you're seeing by now, is that you have the chance to get income without having to sell your shares. Because that's always been my issue with the cap gains, right? Because I have these unrealized gains. So let's say I'm up 400% for a company, or even 20% or 30%. I have to be sure that I'm not expecting any more upside, because and this is not me keeping it simple, right? You can always trade the spread of a company. I'm not going to get technical into that right now, right? Because there's some persons who do that. I've done that as well. But I'm talking now simple language, right? If I sell, let's say I'm at 30% and I sell, I have to be sure, at least in the short term, that I'm not expecting any more upside. If I'm expecting more upside and I sell, that's it. I have to satisfy with my 30% and hope, maybe I want to rebuy at a lower price. I have to hope that either I have the time, I set the order and the order gets filled. You never know, right? There are persons who may want to buy a stock, see the opportunity to buy, they mull over the price doubles or triples, and then they try to buy now closer to the top. Then you have a correction, now they're stuck. And then you're like, what do I do? and my question, or my feedback to that is always make a firm decision. You either decide to buy or not to buy. If you decide not to buy, you have to be willing to miss that opportunity, right? That's just how it works. You have to be willing to say you can't get every single opportunity. You can't buy, every single stock that makes money. That's going to be impossible, right? So we're talking about dividends here, and so you get the benefit of getting that income, right? So when I get dividends from the stocks that I'm holding, I still own those shares. I'm still a shareholder. My position has not changed, and I now have a great opportunity to now use those dividends, right, to reinvest. And I'll talk about that later, right? So the way to pick a dividend stock is to calculate the dividend yield. Now, the dividend yield is important to you because that is the measurement of how much return you're getting from your dividend strategy. As I said, most stocks average on the JSE 1 to 5%. That's terrible. In my opinion, I think you need to be upwards of 5% or more. If you're paying like a 0.1%, a 0.05% or 1% or 2% dividend, I would question if you have been, maybe you could reinvest that cash to do something, or maybe have some form of strategic growth. You know what? That's not a fair statement. Let me say that. It depends on the stage of the company. Let me say that, right? Because I'm thinking of companies now who maybe are at a mature stage, and so they've grown majority of how much they will ever grow. And so when they pay a dividend, it's not likely to be anything massive, but it's consistent, which still matters, right? So let me scratch that previous statement. So your yield is the price you pay per share and factoring in the annual dividends per share, right? So for example, persons this year would have seen Trans Jamaica, for example, paid 2 dividends, one in March, one in October. So you would add those 2 together. So I believe they paid 9 cents in March, 9 cents in October. That's 18 cents total. And you divide that by the price that you pay per share, right? That's your yield percentage. We're going to use an example, of course. So I did these slides back in January, right? When we're doing the investment challenge first. So I just copied them here. I see Dark Dream group saying, do not chase. That sounds like a t-shirt for sure, right? So dividend yield here, we have 18 cents. Let's say they pay that quarterly or they pay that twice per year. It doesn't matter when, right? The total dividend in the last 12 months is 18 cents in example 1. And you pay, let's say your average price for shares is $2.60. you would have a dividend yield here of 6.92%, right? And for all of those persons who have all of their money in their savings account, I ask you this: do you get 6.92% on that? Right now, there's a place for saving, but I think you should always try to match your savings with investments, right? Next example, we have a dividend yield of the same 18 cents, but now we're looking at the IPO price, which is $1.41, right? They IPO'd in March 2020. So if you bought in 2020, you don't need to be calculating the dividend yield based on the current price. It's all about your purchase price, all right? I'm gonna pause here. Are there any questions? Is that making sense? Let me know in the chat, is that making sense? Does everybody know how to calculate dividend yield? Let me take some of these comments as well. So a lot of persons said both here, right? In terms of both investing for cap gains and dividend yield. So yeah, good stuff. Shamar says capital gains, but I look forward to the dividends. Which dividends are you looking forward to? The Diplomat says both for sure. Christopher says both. Antoine said priority on dividends. And of course, Dark Dream with my favorite quote here, do not chase, all right? So let me see if there are any questions on Instagram. All right, no questions. I think I'm clear. So your dividend yield is how much percentage return you get from your dividend, all right? So I'll bring it together. So I love to use examples. So if you bought 100,000 shares, let's say you bought it at $2.60, and all of these are before fees because I don't know how much you're paying for fees at the broker that you're using. So the cost of shares for you would be 260,000 before fees. If your dividend for the year is 18 cents per share, you're getting a payout of $18,000, right? I used to get dividend checks, guys, of 45 cents, of 30 cents. I used to be very annoyed. I'd be like, why are these checks so small? It's not even worth the paper that it's printed on, right? It's all about the number of shares that you have, right? So again, there are persons who would have $260,000 in a savings account. And if you look at it each year, there are some banks who will give you like a 1% on it in terms of interest, and then they collect their fees. So you probably get maybe what, $2,000, $3,000 per year on your 260,000 if it was in the bank. You would get here, if you bought shares in a company that pays you an 18-cent dividend, you would get $18,000, right? This is enough to cover a bill, to cover a light bill, to cover a water bill, to cover a phone bill. Or you can do the very best thing with it, which is to purchase more shares so that the next dividend comes higher, all right? Let's talk about capital gains for a second here. So capital gain is an increase in value from your original purchase price, and this is going to include your fees, right? So there's a way, and let me pause and take this question here from Antoine. He's saying, my question, are you suggesting that the US market has better returns for us dividend-seeking investors? The US market provides you more options for sure. The US market gives you the benefit of investing. So you get gains usually not just from the stock itself, not just from the dividend, but also the US dollar appreciation, right? I shared this before that when I just started buying shares on the US market, the US was about $110. So in addition to my capital gains, I now have gains in terms of the US dollar value as well. Now, persons used to say to me, why are you betting against the valuation of the dollar? And you know that actually doesn't work out for us because our cost of living goes, I'm just working with the realities that I live in. So in my country, Jamaica, the US dollar is known to increase in value against the Jamaican dollar most years, right? Even if it goes up by $1 or $2, because it's been kind of in the 150 range the last couple of years, but now we see it, I think it's at 159, right? So you have returns, Antoine, that can benefit you from the appreciation of the US, and you do have yields for dividend stocks that would beat the average of what the JSE gives you for sure, right? And then Karine is saying, what if you bought at IPO but increased your holdings over time? Would you calculate the yield based on the IPO price or the average price? You may have answered already, but you came on late. Karine, why are you always late? Karine, you must show up early. But you do it on the average price. Average price for sure, right? Because, and hopefully you know how to calculate your average price. If not, just let me know in the chat and I can show it to you, or we can cover that on the community call coming up at 7, right? But yes, you do it based on the average price, right? Because it's just simpler that way, right? Antoine says, understood. I took that into consideration when you mentioned the foreign currency gains in a recent video. Exactly, right? So I haven't even calculated that. I haven't calculated my US dollar gains since I started investing. That's an even an additional level of appreciation that I didn't factor in, right? Anyways, let's go back. So Robert says the US closed at 157 today. Okay, right? So I'll tell you guys a little secret. This is what I do. Now, everybody may not have the opportunity to do this, right? So I know it's a very subjective thing. But what I do, I don't buy US through the bank because that rate is ridiculous. I find friends who travel. I find friends who might have just come from overseas or might work and get paid in US. And I ask them, hey, are you willing to sell me that US dollars, right? Because let's do a peer-to-peer transaction, because usually, let's look at Roberta's example that's saying it closed at 157. If I can buy US for 153, 154 from somebody who maybe they travel, they come back with 200 US and they just want to sell it. They don't want to go to the bank and wait 2 hours to lodge their own money. I'm willing to now, I'm able to now get that US dollar, even if it's just 200, because 200, 200 here, 300 there, 500 there adds up over time. And then now if I get to that 154 and I happen to now be able to transfer that to my Interactive Brokers account, do my transaction, if by the time I'm ready to sell those shares and the US is 160, 165, I would have had at least some appreciation on the value of the US as well, right? I'm giving you guys all my secrets here, but I share these things openly, right? Antoine, it's very easy. It's very easy. I just do a call. I'm in a group. Hey guys, I need some US. Anybody selling? And sometimes I'm selling US as well, right? And I've been saving in US dollars since about 2017, 2018. So Renee and I, we save in US dollars. When we get to a certain point, we either take that US and do something with it. Because if we're traveling for a vacation in the US, we can just withdraw the US dollar, and we don't have to go and buy at some ridiculous rate when we're ready to travel. So we actually, instead of saving in Jamaican, we save in US dollars. So that makes it easy. Plus, we have some revenue streams for us that are in US dollars. We just simply don't change it out. So I have a LinkedIn learning course, for example, that I created last year, and it gives me monthly income of probably like $300 US per month. I send that to a savings account, and I don't change it. I leave it in the US currency. If I need to transfer it overseas to my Interactive Brokers account, I'll do that, right? So there are services that I provide that I get paid in US dollars. I simply just don't sell it, right? Anyway, let me move on here. Another example for you. I love my examples here. Do a quick check over IG. It's just some random guy says, but they grew over time. I'm assuming we are in agreement here. Yes, the US market does. Okay. right, guys, over IG, if you have any questions, just let me know, right? I'm here for you guys as well. So this is an example, right? If you bought 100,000 shares of Trans Jamaica at IPO, it's just 4 years ago, right? 4 years ago, you'd have spent $141,000, right? Before fees. And at the time, if you bought at IPO, there would have been a $750 fee, right? It's not even a percentage. And then you would have the value as at today, as at the recording of this video. If you're watching this in the future, the price may actually be higher, right? And when you multiply the current price of the share by the number of shares you have, you get the current value. So the current value 4 years later is $479,000. And you would have $338,000 in capital gains. And I have not even included the dividends that you would have here, right? I probably should do that. I wish I remember that. I would have done that, right? As a diplomat saying, I'm selling US if you need. Well, message me on IG, and I'll let you know when, right? Karine is asking, can you add a Jamaican bank account to Interactive Brokers? You can you? I think you can add it if it's a US account. I think so, right? All right. Antoine is asking, what's your rate, diplomat? Please discuss that transaction offline, guys. But yeah, okay. So this would be your capital gains, right? So let's talk about the best of both. So for the first 30 minutes, I laid the foundation. I introduced dividends for those who joined us a little late, spoke about dividends, spoke about capital gains. Now we're going to talk about why. So this is the point of the video, right? Why you should be investing for both, right? So let's get started here. So best of both. So this is what I'm able to take advantage of because I invest for both, right? So my total return is maxed out because I'm investing for dividends first, for capital gains second, and I take the opportunities to reinvest my dividends where possible, right? Now, this is not always easy to do because everything is literally more expensive now. But my wife will tell you that I'm very reluctant to sell our shares, right? We could be low on cash, and I'm like, nope, I'm not selling. And every time something comes and we're like, well, I didn't sell last time, the price is higher now, I'm not selling now. And that's been a constant challenge for us, right? But if you do both, your total return is going to be maxed out, right? So imagine the 338,000 that I just showed you that you make from Trans Jamaica. If you bought 100,000 at IPO, if you include now the dividends of, let's say, about 18 to 20,000 per year, and you add that to it, your overall gains for Trans Jamaica, if you just bought 100,000 shares at IPO, would be almost $500,000 in 5 years for an investment of $140,000, right? And if you actually reinvested the dividends each year, then you would get slightly higher dividends each year, right? That's the first benefit of doing both. The second benefit, and I really started to appreciate, let me go full screen here. I really started to appreciate investing for both when I did the Stocks to Watch episode in January 2022, when I listed Trans Jamaica as my stock to watch, I solely looked at it as a dividend play, right? Wasn't thinking about the cap gains. I didn't necessarily know how long it would take the market to recover, etc., etc. As looking at it, at the time, the share price was like $1.20. So I calculated the dividend and said, okay, if I can get a 5 to 10% yield on this every year, I'm good. But then we started to see how slow the market was taking to recover. Capital gains were far and few between. IPOs were coming out and going below IPO price. So the market changed, the landscape changed. And I started to see just how much of a gem Trans Jamaica would have been, because in this climate, in 2024, investors are looking for companies that can do both. So Trans Jamaica, even at these prices, is still an attractive dividend yield compared to the average on the market. Now, I don't know if I'd say the same if it's at $10 and the dividend yield remains the same. That's a different story. But we saw the impact to companies who were reluctant to pay a dividend, what it did to their stock price. So if you have a company that came out and is professing to increase their dividend, right? And when I get into the community call that's coming up right after this, I'll talk about why my thesis for Trans Jamaica is, I think, still holds true even 2 years later, but that's for the community group later, right? So in this climate, if you think about managing your risk, because capital gains aren't guaranteed, you now have the benefit of getting a stock that is now attractive to investors because it pays a healthy dividend. That's one of the reasons why it has appreciated so much. It is paying a dividend that is at the top. I believe it's in top 5 of dividend yields on the entire market right now, right? So there are persons who, they're pension funds, they're institutional investors, they're persons who are looking for what to do with their money, and they're saying, where can I get a stock that it's low in cost, that I can get significant volumes in, and still get a healthy dividend. So let's say they were paying $30 for a stock, $40 for a stock. That's giving them a lower yield than Trans Jamaica. They're going to shift into Trans Jamaica because not only do they get more shares, they get a higher yield on the dividend. Plus, it's been showing them that they're able to get capital gains, right? So I'm not specifically singling out NCB here, Pablo, right? There are other stocks that are higher in price that doesn't have the same yield as Trans Jamaica. And so if you're a dividend investor, because guys, the big companies, the top 10s, as I like to to call them, they're not investing for capital gains. They're not. If you have $50 million, $100 million, $200 million, you're not interested in watching the price go up and down. You're interested in income. You're interested in dividends, right? So when you buy 100 million shares in a company, you're not watching that price every month. You're looking at the projected income that you're gonna get, right? So that's why you'll have, companies seeking to buy certain companies in large volumes, because they know even if the price does not move, once a company maintains that dividend, they're good, right? Hopefully you got what I needed to get from that, right? And then, so I spoke about risk management. In this climate, you have the best of both worlds. So if you're not getting cap gains or you're getting dividends, you actually have an opportunity to get some cap gains throughout the year through the dividend capture method. And then finally, you have the compounding effect, right? So a lot of persons hear about this in terms of, the compounding is the 8th wonder of the world, or, compounding is why you invest, and most persons don't really think about what it means. But you have an opportunity, again, as I said, if you reinvested all the dividends you got, because what I tell my clients, especially those in coaching, if you don't need the cash from the dividends, reinvest it, right? So you're able to now benefit, and you amplify your gains, you amplify your dividends, and it's like win-win, right? So I'm going to close out now, just have one more slide left. If you have any questions, post them now, because in 20 minutes, I'm going to go live in our community group. I'm going to share the link for the community group in the chat, so you are able to sign up, because share this here, community group. So we're going to have monthly community calls in the new community, and we're going to have a quarterly in-person meetup, right? This is separate from the challenge. Now, the community group Think about it as that monthly LGI meeting that we used to have. We used to have it at Emancipation Park. We used to have it at the Microsoft building, or we used to have it at VM. We're too big now, right? There are persons in our community from Canada, from the US, from Cayman. There's somebody from our group in the UK. All of those persons have been missing out on the opportunity to be a part of our meetings, to hear us discuss stocks, etc. We want to bring all of those persons in. So we're going to meet monthly online. And then, of course, the next thing that you want to be aware of is that tomorrow we're having the monthly investment challenge call, right? So I'll talk about that soon, but there's a link for those who want to join me after I finish here on YouTube, all right? So these are some of the things. Now, these are the type of stocks that you need. So these are some characteristics, rather, of the stocks that you need to be looking for, right? So this is my last slide, as I said, to close things out, right? So you want to look for companies with strong fundamentals. Now, I know persons may think that I'm only talking about a stock like Trans-Jamaica here, but that's not the case, because there are other stocks that are performing well, giving me 20%, 30% return, 40% return for this year, right? And I'm happy that nobody's talking about them because when people start talking about it, I want to have my position early, right? So you'll hear about some of them, I think, in the new year, especially based on the fact that I'm seeing some turnarounds in terms of the financials. I'm seeing the earnings increasing for some of these positions. I'm seeing that, you know, they've decided to, for example, acquire new property, hint, hint, right? And so these are things that I'm looking at. And I know that 3 months from now, 6 months from now, when the attention goes to them, I'm able to get the capital gains that I'm looking for. And I'm looking at companies that have the capacity to increase their dividend. Maybe they're not paying a dividend now and they're able to start doing that, right? So that's the first thing. Next is growth potential, right? Especially for the junior market companies. You want to look to see. So I think a junior market company needs to be growing 25, 50, 75, maybe even 100% if it can, in terms of revenues and of course in terms of profits, right? You can't, that's the benefit of being a junior market company, not paying the income tax. You have the ability to grow and grow quickly, right? So if you have a company with great growth potential that's able to start to generate enough cash where they're able to accelerate their growth and still pay dividends, that's what you're looking for, all right? That's what you're looking for. And then finally, it's very important, if you're going to be investing for dividends, is to look at the dividend reliability. Not a company that, if you look at their dividend history, they haven't paid a dividend, or they paid one dividend in the last 4 years, or one dividend in the last 2 years. I'm not a fan of that at all. Richardo, good to see you. I think it's been a minute since I've seen you. I'll get to this, Sean, right? So these are the things you want to look for, right? SC said, try to sign up for the group. I'll address this in a second, all right? Don't move, all right? So these are the things that you want to look for. So of course, I can't get into more details on this. Borrowly, if you are who I think you are, then we spoke earlier via email. I'll answer your question in the community group, all right? So Benji's asking my thoughts on Carreras. Benji, I don't know if you're new. We're a faith-based community, and so we don't invest or talk about or review two specific companies, right? Carreras is one and Supreme Ventures is another, right? And it's something that we got out of the way early when we just started our doing content, because though we're not for what these companies represent, we think they do more hurt than good, and so it's not a company that we look at. All right. Dark Dream, how do you monitor the local movements of the market while monitoring the overseas market? This is one of my weakest. Dark Dream, there is the simplest way I do it now, and I'll tell you this. I'm not tracking everything, right? So for example, I do my research early, and then I rely on that research. Meaning, so right now, there's nothing new anybody can tell me about Trans Jamaica. I've done the research. There's nothing new somebody can tell me about a company like Microsoft. I worked there. I know the business inside and out. And so once I've researched a company, I'm just looking at the financials. You don't want to get caught up in watching price daily. Like I had to ask in the group how much a certain stock closed at today, because I'm not interested in watching it daily. I research, I rely on that research, and then I just wait, right? Hopefully that helps. Do you have any special methods? Oh, I can add one more thing. Just join our community groups, because persons will help you persons will see articles you don't see, persons will read articles that you don't read. And a lot of how I've been able to keep up is our Telegram group on the US markets. That helps me to understand what's happening there, right? So shout out to persons like Adrian, persons like David Rose, persons like Dale, who talk about the US markets often, right? Let me take that off the screen here. Sean is asking, do you have any special methods that you use to predict future dividend payout potential of? That's an awesome question. I'd rather answer that on an investment challenge, Sean. So I hope you're in our community group. I hope you've signed up for investment challenge. But there is a way, yes. But it's not special, I think, but there is a way, yes. Do I think Trans Jamaica has good growth potential? Is that a serious question, Sean? I feel like you already know this. You already know the answer to that for me. Michaela, good to see you again. I believe you joined one of our free classes, right, Michaela? Let me know. Good to see you again. And send me the link to the real estate fund. I'll check it out for you. I don't know how it's made up, all right? Roger is saying, I think TJH is 14.3% undervalued. That's a very specific thing that you've said. I hear you. I hear you, Roger. I don't have any comment. Roberta is wondering if the share price will grow before a major sell-off. I don't know. Is that a question or a statement or a comment? Like, I don't know. All stocks that have run-ups have pullbacks, have persons take profits. There are persons who are holding from IPO right now who are up 300% and they want to take a profit. Let them. That's okay. There are persons who bought at $4.50. We're going to be waiting till it gets to $6 or $7 or $10. Let them do so. Each person, that's the beauty of investing, guys, that you can join or you can buy shares in a company now and meet your targets for returns because we're investing for the future. It doesn't matter how far it has come. It doesn't matter how much it has gained, right? I remember when I first started to invest, and when we were having these monthly meetings, and in 2018 we were talking about NCB, and we're like, guys, NCB just got to $100. I wonder if it's too late to buy. It got to $100, and we're like, I wonder if it's too late to buy. And we're talking about it, and it was later that year or the next year that it went to $235. right? So I think persons, when you join or when you buy a stock early and you see it up 300%, you get like there's no way it will grow more. It's grown too much. It's too high. You guys aren't looking at the long term, right? You're not looking at the long term, all right? Okay, Michaela said, yes, I've been to a few events, love them all. Cool, thank you so much. Hope you're on our mailing list, and I hope you're in our new community group as well. I don't see your name in the list, Michaela, so I know you're not in our new community yet. Sean says, seriously, after monetization of Williamsfield, like, what else is there for Trans Jamaica? Sean, there's so much more to say. I cannot say it here, sir. It's not fair for me to say everything on YouTube and persons are paying for an investment challenge. It only makes sense that I save some of my thoughts for them so that there continues to be value over there. But there's more, all right? Trivia in 5. So you, Rhino? I'm not sure if that's what you in. Oh, so you think, okay. TJH will hit $10 before the end of 2025. Why do you ask that question, Trivia? You're asking the wrong question. You're asking the wrong question. You're asking the wrong question. Dark Dream, I'm not sure about Burrito. Not a stock that I watch, not a stock that I track. I'd have to look into that. Not sure. Roger says, why I can't get any info on Spur Tree? Where can I find info? I share your pain, Roger. Yes, we have a mailing list, Richardo. You need to join. Our mailing list now is on MailerLite. It will change soon. By the end of this year, we'll change email providers. But for now, you can go to our link tree. No, the link is not there anymore. We removed it. Message me or email me. Darnell is asking, what are my thoughts on NCB? Is it a good stock to invest in? Darnell, excellent question. I think you should join our community conversation that we're about to start in 8 minutes. Let me put the link here, community group. Join the group. The link is in our bio. And I'll answer that question there. That's the best I can do because we're about to wrap up here. All right. So I wanted to remind everyone you have a great opportunity. I've been taking questions, of course. I wanted to remind everyone now these are, I think everybody can agree, right? There are 70 persons on now. I think everybody can agree that we provide you with absolutely great value on our YouTube channel, right? I think we're one of the best out there in terms of actual practical investment knowledge that you can. I actually heard somebody said to me, I saw somebody at a party once and they're like, Jermaine, I've watched your videos and I've made millions of dollars from watching your videos. And I saw that and I was like, buy me a drink. But, seriously though, I was like, that's exactly what I wanted to hear. We give absolutely great value for our YouTube channel because we're not trying to hold out any information, right? We're not trying to put anything, to hide anything, right? But what we do see is an opportunity to provide even more value, right? So that's what the challenge is for, because there are nuances that we can't explain on YouTube. That's what the one-on-one coaching is for, because when you say, well, Jermaine, I have some stocks, but I don't know what to do. I've been buying stocks for a while, I understand it, but I'm not making any money. Or, I haven't been able to invest as consistently as I want to. I can't answer that question on YouTube, right? Because as you see, when I'm on YouTube, it's me alone talking. You can type, but of the 6 to 8 persons, probably 10 of you are talking. The other 58 are watching. So you don't get the maximum that you can get in terms of help from me. These are the ways in which you can do that, right? And it is when you talk about a stock being undervalued, our services are undervalued. And I'll tell you, it's something that, because we want to help persons have a basic level of knowledge, that's why our prices are where they are right now. But as we focus our services, as we invest in ways to make that better, as we build, things that we're working on, that will change. And so if you want to learn how to invest, if you want to just break that barrier that may be there, where you've been watching our videos for 3 years, 4 years, but you're not really making any money, you probably need one-on-one support. You probably need to join the investment challenge, right? So I see Roberta saying, I've learned so much from a YouTube channel. Thank you. You are welcome, right? Like there's somebody who said, so I was talking to them about one-on-one coaching, and I said to them, if you can't afford our coaching right now, go back to the very first video on YouTube. We have 430 videos by now. And I say, if you watch all of the videos that we have on our channel for the next 4 years, you'll be able to make so much money that you can afford the coaching, or you probably won't even need the coaching by the time you're done, right? So what the coaching does, it gives you the opportunity to get the best of me, right? Everything that I've learned for the last 7 or 8 years in investing, I concentrate and give you in 10 targeted sessions that will help you to actually make money with your investments, right? That's what the coaching does. And it's valued more than I'm charging for it. But I'm still giving it to you at a discount only for it ends 5 hours from now, all right? So trivia, can you please explain what's the difference between Trans Jamaica and TGH 8.0? Okay, so one is the ordinary shares, one is a preference share. So that 8.0 speaks to the yield that you get for those shares, right? Hopefully that helps. If you're not clear, just jump over to the community group and I can explain it further. All right, so let me close on this because, guys, I have to jump over to the community group, which, again, you're more than welcome to join us. It's completely free to join the community group. So SC is saying, try to sign up for the group but didn't get an email. So once you sign up, you have to type your username and password to sign up for free. When you finish the sign up, it should redirect you to your library. Your library, you'll see Access Now, Learn, Grow, Invest, Connect Community. Click on that, it brings you over to the community group. All right. So let me see if I can share something with you. Okay, so persons have actually been joining since we started the video. So let me see if I can give you a preview, right? Before we have 2 minutes left. Karine says, I've benefited tremendously from your content as well. You are welcome again. Antoine says, thanks for another amazing video. Yeah, so I want the videos to be practical, right? I don't want to waste your time. I don't want to waste your time, right? You're giving me your time, which is your most valuable resource. So when you watch a video from me, you should learn something. You should hear something new. You should be able to connect a dot that you never connected before. And as I said, you have even more value to get from our other services. Karine, Roberto, and Antoine, I'm going to ask you guys, please send me an email with that feedback, because when I was building our new website, I was like, I don't have any testimonials. So send me a message, like tell me how exactly you benefited, Karine. Tell me, Roberto, some of the things that you've learned, like put it, send me a paragraph, something that we can use, because somebody said to me, if somebody's hearing about LGI for the first time, what would you say is the value? And I thought about that, and I said to them, I'd love to have some more testimonials, right? Because my perception of the value may not be yours, right? So hearing from you would definitely be helpful. All right, let me give you guys a preview of the community. So when you see it, you know what you're looking for. So we have, so the benefit of this community, as I'm sharing my screen and you're seeing, I'm going to zoom in, but I don't want to zoom in because I don't want everything to get squeezed up. But this is our new community. So what we're doing is combining our Facebook, our Telegram, our LinkedIn in one place. So you see it saying that the meeting is happening now. I got to go, right? but we are bringing three things together: our general investment community, which is free; our investment challenge community, which is paid, that's the monthly membership; and we actually have a business community. So we did a business challenge that you'll be able to, start a business, register a business, build out your journey as an entrepreneur, and we actually have meetups for that, right? So as a part of this community, as you see, we have meetups that are coming up. So the monthly investment challenge is tomorrow. It's the last Saturday, and we have a general community meetup happening right now. So that's where I'm going. If you use the link that's gonna be in our bio, you'll be able to join me over there. I want to thank you guys so much for being here as usual. I really appreciate you guys. And we formed this community because we want to learn as much from you as you're able to learn from us. And so, we'll try to do the best we can for you, but we need your feedback. We need your support. We need you to even like the video so that it, YouTube will show it to more people, all of that. So thank you. And I'll see you guys over the community group. See you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest. Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.